welcome to the Seller Dibs YouTube channel. In this video today, we're going to be talking about many things. One of the things we're going to be talking about is how to sell premium, a little bit about the company, a little bit about our product changes and things that are different now. You may have been a client of ours a year ago, maybe even 2 years ago. We have completely remodeled and rechanged what Seller Dibs is actually about. Right into it and take a look at our website. We changed completely everything from our layout to our product line, and we actually dropped our prices dramatically. We don't have multiple tier systems anymore. It's one tier system. We're calling it the Deluxe membership. So with this membership, you have real-time text alerts, live trade alerts with entry and exits, premium selling alerts, access to the company portfolio, and much more. It gets in more detail. If you want to take a look at it, just go to sellerdibs.com. That's simple. You can check out everything here, but I'm not going to waste your time on that part. I know why you guys are here. You guys want to learn how to sell premium. All right, guys. Let's take a look here. It's one page here, all right? So all the information I'm going to feed you is here. And I tried to keep it as short, as simple as possible. If you don't know absolutely nothing about options in general, there are many great content creators on YouTube who create these videos on a daily basis. I'm not going to name any of them, but again, you can just go to YouTube and just type in what is a stock option. Okay, you can start from the very beginning. What I'm about to show you here is how to utilize them, how to trade them, and how to make money consistently selling options. So there's two different types of markets out there in the option world. You can either be the buyer or the seller. And I'm going to show you how to be the seller, because all naked options, take a look here, expires worthless. Okay, so that means 4 out of 5 trades goes to shit. That's pretty much what that means. So basically, if you're asking yourself, why am I losing money selling options every single goddamn day? Well, the stats are against you. Now, how do you get to the 20% side? Well, those are the people who sold you those 80% of those contracts that went worthless. And I'm going to teach you how to do that. It's actually a lot simpler than you might anticipate. It's not too complex. There are some complex forms in it, but I'm going to leave all the complexity out of it. I'm just going to keep it really simple. I don't know, maybe a 15-year-old will probably understand this, okay? Once you learn what options are. So go check out a video on options, come back here. If you guys want more content about options, like specifically naked options, I can make more videos. Put a comment, I'll check it out, I'll read them all. Anyways, let's hop right into it, right? We're gonna look at a stock, Apple, today as an example. You can get any stock, but I'm just gonna use Apple. And none of these numbers are based upon real events or real numbers. I made them up. As you can tell with the dates, if you take a look here, we're in 2025. Okay, so we're in the future. It'd be funny in the future that Apple's actually in this price point. We can come back and laugh about it. So the example is Apple. The stock price of Apple is $100, okay? So there's calls, strike 1 or 5. The premium for that contract is $2, okay? So if you were to buy it right now, it would be $2. If you were to sell it, you would be on the ask, and you would ask for $2. And eventually, depending on how the stock does and performs, it will fill you in that order. Puts, we're going to use a strike example of 95, and the premium cost is $2. So basically, let's explain what we're doing here. What is a covered call and what is covered puts? Now, there's a definition for it. You can look it up, but I'm going to give it to you in simple terms. So a covered call is agreeing to sell your shares at a strike, keeping premium and share profits. Now, what does that mean, right? So what that means is you have to have shares which are covered by selling a contract over it. For example, you have 100 shares of Apple. One contract represents 100 shares of Apple. It's just like options. And nothing's changed, you just flip in the script here. So what you're doing is you're agreeing to sell a call that somebody's gonna buy. The person who's gonna buy the call from you is gonna be somebody who is anticipating the stock is gonna go up or go down, or whatever the situation is, right? They may be doing a spread, multiple reasons, market makers, there's gazillion, the market's huge, right? People will buy for any reason. But anyways, you're selling Apple calls and you're selling Apple puts, and I'll explain that in just a second as well, all right? So basically, there's 2 terms that you have to learn, and it's sell to open, STO, and STC, sell to close, okay? So what this means is that you're selling to open a position. It's the same way as you do an option order on whatever device, or whatever broker you're using. It could be Robinhood, TD Ameritrade, it could be any broker you're using, doesn't really matter. They all provide the same language and the same tools to use. You're doing a STO. Now, if you were to buy a naked option, you would do a BTO, which would be a buy to open, and then you'll do a sell to close on that if you want to trade it or sell it, whatever, right? But for naked options, that's buy to open and sell to close. On covered options, it's sell to open and sell to close. Okay, so all you gotta remember is STO. You can totally screw up by putting the wrong order here. Keep that in mind, it's very important. Paper trade, learn basic experiences before you hop in, all right? So we're gonna go as an example as Apple, as I mentioned, and we're gonna start with week 1. Here's the play. You're gonna get this message on your phone. You're gonna get a text. STO, Apple, 95 put at $2. Today's date contract, February 9th, 2015, okay? So this is the play. So you would log into your broker, you would submit that, and the order will get it. And let's say we are doing a put. So why are we doing a put here? And what does it actually mean, right? So cover puts, agreeing to buy the shares at the strike, keep premium, and own shares cheaper. Okay, just keep repeating that. Agreeing to buy shares at a strike, keep premium, own shares cheaper. So what does that mean? So we're agreeing to buy the shares at Apple at $95, but Apple is currently at $100 right now. So what does this mean? So we're gonna make a contract. So we're gonna sell a contract, STO. We're gonna sell a contract of a 95 put. A 95 put, and the price is at $2. Okay, that's the play. A week goes by, the contracts expire. Okay, and Apple closes above $95 to $98. So it only dropped $2. It didn't drop $5. So this contract went 100% worthless. So whoever bought this and traded it, whatever, doesn't matter, this contract that you sold is completely worthless. What that means is that you collected $2 on that contract. You just made $200, and your risk was to buy Apple at $95. Hopefully that makes sense. Again, if something doesn't make sense, just keep replaying the video. It'll get to you, I promise. It was the same way for me learning this. I was busting my brains, and I didn't have content or a teacher to tell me any of this stuff. I had to learn on my own, and YouTube wasn't a big thing back then. So anyways, great. Congratulations. You made $200. Now, week 2, we're going to do a different play for next week. So now we're going to do an Apple STO, so sell to open Apple, 95 put again. Now, because the stock has dropped from 100 to 98, since we're selling STOs at 98, the contract price naturally will appreciate more. You still want it at 95, but it's at 98, and it's a little bit closer to 95. And again, there's calculations to that, like the Greeks. You can also look into this. This is all mathematical, but in this video, I'm only going to be talking about premium selling. Apple closes at $92. Okay, you're like, shit. Now I got to buy Apple at 95. Okay, so you collect 100% of the premium, and you buy shares at 95. So what does that mean? So now you own 100 shares of Apple with a cost basis of $90, and Apple is at $92, right? So you are green on this trade still. Week 2, you are green, still $200 on this trade. So if you were to cut ties with this, like, I don't want this anymore, you can sell it right then and then and make $200. Now, how is that possible? Well, you collected here $3, okay, and you collected here $2. That's $5. Okay, $95, the price you agreed upon, 95 minus $5 is 90, and the stock's at 92. So you're in $2 of profit per share, multiple of 100. So now you own 100 shares of Apple. We're going to week 3 now. We're going to do another play on this. So now we're going to do a sell to open Apple 95 call. Okay, so what is a call? Agreeing to sell your shares at the strike, keep premium and shares profits. Now, we'll sell this. Somebody bought it, and they paid us $3 a contract. And Apple closes at $93. Basically, from 92, it went up $1. But it's not at 95, so which means this contract went 100% worthless. And you, the person who sold this contract for $3, you get to collect all 300 shares. So again, everything's multiple of 100. Now, what does that mean? It means that it reduces cost basis, and now your cost of Apple went from 92, right, minus $3, and now you're at $87. And Apple is at 93. So now, technically, you're $6 in profit on the Apple shares on week 3. Now it's week 4. Okay, you're like, well, I made a decent amount of money, depending on what your strategy is, and this is the alert you're going to get. This is an alert you will get on your phone. It's going to say STO, so sell to open Apple 96 call, $2, March 1st, 2025. Apple closes $98, big week. So what happened here, right? You sold 96 calls on Apple. Your cost basis is $87, and because you sold at $2 premium, you just reduce your cost basis to $85. So now your true cost basis on Apple is $85. If Apple goes below $85, you will technically then start losing money on paper. Okay? So now Apple has a big day. It closes at $98 and your contracts expire. Now your contracts are in the money. And what this means is that, let's go back here, covered calls, agreeing to sell your shares at a strike, keep premium and share profits. All right, so we're gonna sell our shares for a strike, which is $96. So sell your Apple shares at $96. Total profit for this trade, cost basis is $85. Makes sense how we got to $85? Right? We were at 87 minus 2 is 85. And we sold at 96, and there's an $11 a share profit. And each contract represents 100 shares. So now you made a profit in 4 weeks on Apple with $1,100. That is the basics of selling premium. Okay? I hope this makes sense. I will do more videos and elaborate more in detail as time goes on. But in this video, I want to combine everything into one and kind of just go through it and explain what the product line is and what we're going to do. And this actually has mathematical growth into it. As you can tell, it's really hard to lose money here, right? Even the worst case scenario, if Apple, let's say, has an incredibly bad day and you sold puts, yes, you're agreeing to buy the shares at a certain strike, but you can still sell cover calls on your position and keep reducing your cost basis. One or two things are going to happen. Eventually, you'll own these shares for free, or you're going to lose the shares in profit as long as you sell above your break even. Okay, so my break even will be, let's say, hypothetically, let's say Apple didn't close at 98 and it closed at 94, right? I'm still at an $85 cost basis. So as long as Apple stays about $85, I make money. That is premium selling, as the simplest terms I can explain it. Hopefully you got something out of it. But anyways, that's premium selling. That's one of the things we're doing. And the next thing we're doing is actually, let's take a look here. Our TD Ameritrade account. We are doing a portfolio. Okay, so I'm starting this from scratch, 100% scratch, and I'm starting this with real figures. Okay, I'm gonna put money in that a regular person will be able to do. When I mean a regular person, I mean regular income, right? If you're making, I don't know, okay, our clientele base are mostly engineers, in high level paying jobs. So I'm just gonna do an average salary of $50,000 to $100,000 a year. So what we're going to be doing in this account is we're going to be depositing every week, bi-weekly, monthly, a certain amount of money. And that money is going to be realistically to our income base that we're describing. So you're never going to make a deposit of like $10,000 into this account. The point is it's a self-growing account. The revenue created from it will be self-funding. So we don't need a lot to get started. So I'm starting with $1,000. You're more than welcome to start with me today, next week, next month, but I'm starting at 1,000. And you can watch these recap videos month over month over month, and you can see the progress that we're going to be doing on this. But anyways, every week we're going to make deposits and we're going to start buying positions, okay? And I made a quick watch list here, stocks I'm going to buy. So by the way, this is the Discord here that we're doing. You can see that we have a bunch of great tools here. Option flow data, analyst ratings, just amazing content stuff, resources, highlights of certain events and certain things, and that's going on the market. We have news. We have, just amazing stuff and tools to help you trade. So we're much more than just providing you with plays. That's what people want, but we do provide other tools, advanced tools and research regarding just data that we can provide to you, statistics on data, and just make better trading habits. We provide watch lists daily. I do voice trades every single day. And the community is growing, okay? And we've been around for 2 years, and we plan on being around for the next 20, 40 years until I retire and see where this goes. But anyways, so the alerts will be issued here in the alert section, okay? So basically some of the alerts you will get, if you look here, you can see there's a negative sign here. So these are basically cover calls that I'm doing on positions that I've done previously. But anyway, this is the past. We're starting brand freaking new right now. Okay, this launches today. We're doing it Monday. And if you're interested in our membership options, by all means, you can check it out. We combine everything together. We dropped our prices by 50%, and we're going to be running a promotion for the rest of the month. So all of September, we're going to be running a promotion of 50% off your first month as a member. Again, you don't have to be a member to enjoy all the benefits we offer. Okay, we do have other things you can do. For example, you can connect with us on Instagram. Instagram is an amazing content tool, and we provide here education, data, a whole bunch of things you can do, and it's all here. You can check out some of our plays from before. This is the portfolio I did last time, and as you can tell, it's consistent growth. It just keeps going and going. Premium selling is the way to go. There are ways you can mess it up. My job is to teach you. Again, it's not easy, but once you learn it, I promise you, you'll never worry about a trade ever again, because whatever happens, the market's red, I make money. The market's green, I make money. It's an amazing style of trading. I want to adopt this into people who are trading naked options and losing money. Now, we are going to be trading naked options as well. What that means is that we're going to provide plays, naked plays. So we're going to have two different accounts. We're going to have Platinum Alerts. Platinum Alerts is going to be alerts on the company portfolio, whatever the portfolio I just discussed, this one over here. Okay, whatever play we do in this, you're going to get a message on your phone. And we're also going to be doing daily small accounts that we're going to be trading. These accounts are going to vary between $1,000 to $5,000. And we're going to trade these accounts to make profits, to deposit it into our long-term accounts. Okay, make sense? We make money, take it, deposit it to the next account, to the long-term account, and basically buy more shares, make more revenue. And technically, when you're trading options, 80% would expire worthless. So on naked options, there are good chances some of these plays will go to zero or bust out or whatever happens. The money to be blown is pretty easy. That's why we keep this account incredibly small. And worst case scenario, let's assume there's a bad month and I lose $1,000 trading. Now what happens then? Well, let's see how our portfolio did, right? If our portfolio gained profits over that time period, we'll be able to withdraw some of the profits, our premium that we sold and collected, and deposit it back to the short-term account, the day trading account, and we can trade there and make money there, deposit it back. So we keep it as a small account there and just start growing this. I mean, my goals and expectations on this is really high. I think we can achieve numbers at six figures, probably less than a couple months. Okay, and why? Because we're going to be actively trading this portfolio. There's going to be the positions. So some of the positions I actually want to talk about here. Yeah, you can probably see it here. Yeah, right here. You can see it here. So some of the stocks, Google, Nvidia, Meta, Coin, Airbnb, Roku, Twilio, Netflix, Starbucks, Spotify, CRM, Amazon, Zoom, Disney, and AMD. These are the stocks that I like primarily because of the price point. None of these stocks are like, $2,000, $3,000 range. What that means is that it's going to be relatively cheaper to buy these shares in the 100s over time. So in the beginning, $1,000 is not going to be able. You're not going to be able to, buy any of these for $800 a share. You're going to be buying them piece by piece by piece, and you're going to slowly build a portfolio. Now, some of these names might be replaced. They might be removed. There may be many things happen. Maybe I don't like Coin anymore because something changed in management. It will change. So the portfolio will adjust and change. So just imagine this, okay? You have 15, 20 stocks in the hundreds of each, right? You have 100 shares of Google, which is 10K. 100 shares of Nvidia is about 13K. Meta probably at 160, so that's 16K. So let's say this is a $100,000 portfolio right here, split it between 50 names. And what you're gonna do is you're gonna sell calls here, calls here, calls here. Maybe you lost Airbnb, you got exercise, right? Cover calls, it went up, you lost it. Boom, then you go back and selling puts on Airbnb, try to get it back for a cheaper price. Just keep collecting premium until you succeed in the portfolio, and it's gonna grow. The math is there, the stats are there. This isn't guesswork. I don't have to go here and sit here and go to a TradeStation here and graph out a million things here. What a join for free. All right, I don't have a TradeStation here. I just have the app open just for reference. Go here, do these trades, and you use all this data, but do it on the other side, the winning side. All right, guys, I'm going to wrap this up. I really appreciate you guys listening to us. Before you leave, I'm going to drop the link to our website in the description below. Also, our Instagram account will be dropped below, and the promotion code is going to be dropped below as well. So sign up. I'll see you guys on Monday.